Hello everyone. This is the pre-market report video for today, 4th July 2023 in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, it was quite an event in Indian market. For the fourth consecutive day, Nifty opened a gap up of over 50 points and it continued to increase over 19,300. Till that time 10:30 am, Nifty was supported by Bank Nifty and Bank Nifty was supported by HDFC Twins. After 10:30, profit booking in HDFC Bank trimmed some of its gains and pushed the Nifty down to 19,250. But after that, two companies, one Reliance and two ITC, both started to support the market and pushed the Nifty back again above 19,300. Even on their opening itself, Reliance was positive because of their third deep water oil production start. On top of that, around 11 o'clock, American investment bank Jefferies raised the target price for both Reliance and ITC. For ITC, they said they are raising the target price because of their shift to asset-light strategy for hotel business. Those who follow ITC might know this. Hotel business in ITC was always an issue, since its revenue and profit contribution is less than 5%, but their capital expenditure was always over 20%, and that has been an investor complaint on ITC for past 2 decades. Now, in the asset-light strategy, slightly over half of the room inventory is through management contract, while the rest comes from owned hotels. In case of Reliance, according to Jefferies, the share price is expected to increase over 22% because of their new expected soon to release 5G phone. So, yesterday in the stock market, there was a huge buzz over Reliance and its 5G phone. And indeed in the aftermarket hours, not 5G, but Reliance launched the new 4G feature phone for just 999 rupees. Now, because of this new 4G phone launch in the GDR, Reliance increased over 3%. Anyway, back to Nifty. In the end, Nifty hits the fresh all-time high 19,345 and finally settled at 19,322. Sector-wise, metal, oil and gas, FMCG and PSU bank up by 1 to 3%, while IT and pharma down by 0.5 to 1%. The advanced decline ratio was slightly more than 1. So it's not all positive, almost equal number of stocks declined yesterday. About institutional activity, again FII net bought shares for near 2000 crore rupees, whereas DII net sold for approximately 340 crore rupees. So that's what happened in Indian market. After that, all 4 major European index closed negative since they had a really bad manufacturing payment data. I mean, if required, please pause it and have a look. All of them comes under 50. We all know in any sector PMI data, if the value is less than 50 means it is contraction. Here, none of the European countries got the good value. Germany is the worst, just around 40. It means approximately its manufacturing contracted near 10%. In comparison, yesterday early morning, S&P Global released the India one. It comes as 57.8, which shows that Indian manufacturing in June month expanded near 8%. Moving on, after that, all 3 US major index opened flat and in the end, all of them closed near flat as well. I mean, flat means very flat. For example, have a look at the S&P 500. The difference between the day's low and high was less than 10 points. Basically, that flat was US market. There are 2 reasons for that. First, on Friday, US government released the various PC inflation for the May month, which comes as really very good. I don't want to repeat and bore you guys with the same information since we discussed enough in detail on the last pre-market video. Anyway, CME Fed Watch tool is giving over 85% chance that Fed will increase 0.25% interest rate hike in the upcoming FOMC meeting. So market kind of already accepted the rate hike. Second, tonight, US market is holiday because of their Independence Day, and following that, tomorrow, there is a schedule for release of last month FOMC meeting minutes. Just a bit of history, I checked the last 5 to 6 times data. Whenever the FOMC meeting minutes release, on that day, US market was negative all the time. Will this time be different? Don't know, let's see. So, because of those 2 reasons, all the US market closed flat to positive. At the end of the day, Dow Jones was near flat, up by 0.03%, S&P 500 up marginally 0.12%, and Nasdaq too increased marginally 0.21%. In case of VIX, it's too in the same place around 13.5. On the tech stock world, only Apple closed significantly negative, whereas Tesla increased over 5% as their quarterly sales data beats the analyst estimation. About oil, because of the bad PMI, despite Saudi Arabia's announcement that they are going to extend the production cut to till September, it decreased 1%. At this time of this video, WTI crude oil is trading around $70 per barrel and Brent crude oil was trading near $75 per barrel. Regarding Indian ADR in US market, despite closing negative in Indian market, both Infosys and Wipro closed significantly positive, whereas banks closed in line with Indian market. About Gift Nifty, at 3 a.m. Indian Standard Time, it ended the trading at 19,440, which is kind of indicating relatively flat or 25 points negative gap down opening. So that's what happened in the global market. Now let's move to the India related info. First, about Bajaj Finance. Yesterday in the aftermarket hours, they released their first quarter's financial book statement. As per that, their loan book grown by 34%, their deposit grown by 46%, and assets under management increased by 32%. Overall, everything is an unbelievably good numbers. Second, about Tata Motors, they announced that their ex-showroom price across all models will increase on an average 0.6% from July 17 onwards. Just for info, this is the third time this year Tata Motors increased their vehicle price. First in January 1.2%, then in April 0.6%, now again in July 0.6% increase. So roughly near 2.5 to 3% price increase in this year alone. Mostly price increase favors the stock since it increases the profit margin. Third info about the quarterly results, TCS and HCL will be releasing their results first on next Wednesday 12th and Infosys will be releasing on 20th July. At present, as per Jefferies, they are expecting TCS to buy back their own shares. Finally, not India related, just an interesting news. Yesterday, there was an agreement between IMF and Pakistan that IMF will be going to issue the loan up to $3 billion in the next 9 months. Because of this deal, in one single day, Pakistan index increased approximately 2,500 points. I mean, from 41,500, it almost reached 44,000, which is roughly near 6%, which is really crazy increase for an index. Just for comparison, in Nifty terms, in one single day, it increased near 1,200 points. As a summary, US market closed flat, Asia's Nifty also indicating a flat opening. However, US tech stocks looks good and so does in our IT stocks as well. In addition, there are multiple index stock specific positive like Reliance 4G phone launch, Bajaj Finance financial related info and Tata Motors vehicle price hike. So let's see, will Nifty scale another new high? We will know the answer in next hours. About the things to look out, there is not that much I am aware of it. Coming to technical, on the daily chart, Nifty forms the fourth bullish gap up medium candle with short upper and lower shadow, making higher high and higher low for the fourth consecutive day. I mean, in last 5 trading sessions, Nifty had a perpendicular rally. It rallied around 675 points, literally without meaningful pullback. So on the daily chart, momentum indicator RSI value is at 75, which is still a buy call, but it's close to overbought condition. And also yesterday, Nifty was within the range bound between 19,250 to 19,335. Thus, it triggered the negative crossover in hourly momentum indicator, which is kind of indicating the loss of momentum. However, we can't conclude that. We have to wait for more evidence for forecasting consolidation. I mean, kind of breaking yesterday's low 19,234 will be the first sign to look for. Anyway, since it got the breakout and it forms the ascending wedge pattern, so overall the uptrend is still intact and the comfortable close above the breakout area implying that it can continue to move towards 90,500 levels as long as it sustains above 19,150. In case of Bank Nifty, it too hits the all-time high value and forms gap up bullish candle with long upper shadow and short lower shadow. On the daily chart, Bank Nifty price is moving along the upper band of Bollinger Band, indicating that the positive momentum is likely to continue. And also, unlike Nifty, the daily momentum indicator has triggered a fresh positive crossover, which is a buy signal. Thus, both price and momentum indicator is suggesting a further upside in the Bank Nifty. So, we can expect it to continue uptrend till at least 45,500. Since long upper shadow at the high level shows the hesitation and the increase of sellers in the market, so we can expect them to come back around 45,500. Coming to open interest analysis, based on change in open interest for Nifty, there was a significant number of call option unwinding took place between 19,000 and 19,200, and some of the new call options started to add above 19,500. So 19,500 is the resistance to break. Then, based on overall options open interest data, 19,000 got the maximum put option open interest, followed by 19,200. So 19,000 will act as the strong support for this expiry, and 19,200 will be the immediate support. Regarding Bank Nifty, based on overall options open interest data, 45,000 to 45,200 got lot of short straddle, so ignore those points. And on the higher side, 46,000 got the maximum call options, followed by 45,500. Thus, 45,500 is the immediate resistance. Then the next one to break is at 46,000. On the lower side, 44,500 is the support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.